What's going on, guys? Bexio back, and today we had a brand new video back on Bitcoin because it's been up, down, all around, going crazy this recent month, and the Fed news didn't help. This stock market reacting negatively to this Fed news and continuing to react negatively, not helping quite so much either. But if you guys are not already subscribed, make sure to smash that sub button because we're on the road to 1,000 subscribers. But let's jump right into this types of stuff with everyone freaking out over Bitcoin with no real huge reason to. So we see Bitcoin right now kind of in this bottom of this red channel here, basically kind of fighting to get back in. We had this massive drop down to our other support level here, bounced right off of it and coming back to the bottom of this red channel here. So, I mean, last time we were in this red channel, we were in it for weekish, a little bit more than a week, maybe closer to 2 weeks before going out of it. And this time we're falling back into it. And something that I post on Instagram, so if you don't follow me, drop a follow. But actually, this segment here looks very similar to this segment back here. So you see this drawdown to a bounce up to back to another drawdown. We see this another massive drawdown. This section kind of longer than what we had right now, but it jumped right back up, had this move up, move back down, more consolidating, and then explosion up. So obviously, the passes and everything, but if we see something play out similarly to this, we might see this kind of droop down even more, maybe hit this second line down here at around 37,000 before really jumping right back up. But it doesn't have to, obviously, but we might go lower. We might just stay around this 39,000 and then rally right back up to trying to get all-time highs, or, if something like the previous one plays out like it has before. And another thing to note, in the sea of red we see on this left-hand side here, if we look at Bitcoin down 0.39%, 0.4%, but the S&P down 6.69%, it is down more than Bitcoin. So the S&P more volatile than Bitcoin, more risky. Everything. People say Bitcoin's too volatile, but it's less volatile than the S&P 500 right now. So, just something to kind of think about. But this was the big news that we saw out of Kazakhstan when, a couple days ago, the Bitcoin network power slumps because they have like 19% of the hash rate. Or you see right here 18%, but it's probably more than that now because of the China ban. But, this is a big story. People saying, freaking out. And then we see that was on June 7th right here. And if we go to, or January 7th, if we go to January 10th, then that's today. And we see major mining pools, Bitcoin hash rate nears recovery as Kazakhstan's internet is partially restored. So, what, 3 days of internet outage and stuff for Bitcoin hash rate, people trying to make it a point, trying to freak out. And then this is the hash rate. So if this little dip right here is what really scared you and made you freak out, like this is a massive up and a great recovery, like from before in the China bans, everything happened. Massive recovery, new all-time highs after new all-time highs. Doing great. The hash rate is doing great. Nothing was bad's happening. We got cut basically in half, more than in half from the China ban. Nothing happened to the network. Still, the price gets affected, but the network, nothing happens. It adjusts, it redoes the difficulty. More people make more money, attracts more people to the network, and then all of a sudden the hash rate goes right back up. So we're seeing obviously people flocking back to mining Bitcoin. And as we all know, the longs and shorts, the derivatives market, and the leverage is what's really just causing all this volatility and pain. And in the market right now, it's been mostly pain because longs have been getting liquidated. So if we look at this right now, we're seeing this is the past 90 days. So still a long uptrend for longs. We see, liquidations happening here. In shorts, we saw this huge explosion in shorts earlier, and then it came back down. But now we're seeing shorts rise yet again, getting very unhedged shorts again, very small amount that are actually hedged. So what would happen if we start to see these shorts continue to pile on and the price try and grind up and get to 42, some 42.5, 43,000, grinding up? It's not going to happen fast, but slowly grinds up into liquidating shorts. Then we get what happened with the longs, where the price got, went down pretty rapidly when longs get liquidated. Then we'll see the price go up rapidly when shorts get liquidated. So it works in both ways. And as you can see here, the majority of open interest on Binance is short. It's leaning short. FTX, it's more than leaning short here. And then Binance, yet again, we have more longs. But you look at the overall here, it is definitely more red than green. So there's way more people shorting the market and shorting Bitcoin than there is longing it at this point. So that's something to keep in mind. When you have major shorting, then obviously that's going to try and push the price down. But if you get the price grinding up, then you get the short squeeze and the liquidation of shorts, which pushes the price higher. And if the shorts are overexposed and over greedy like the longs have been, then we get a pretty big push up in price because lots are going to get liquidated at once. You can kind of tell that here with this chart, kind of looking at a lot of the exchanges flipping negative in their funding rate. So that means, so when an exchange has a negative funding rate, that means the shorts have to pay the longs to keep their position open in the perps market, perpetual futures market. And then obviously if funding rates are positive, then the longs pay the shorts. Usually positive funding rates are like a bull market, or more people bullish. If negative funding rates, more people bearish. But it's really just kind of the derivatives market and focusing how that's happening. And this flush is needed because we got to get this greedy leverage out of the system. It has to happen. We cannot have these longs continuing to be out here, be greedy. If we look at these funding rates, we can see, on USDT or USD margin, so, backed by stable coins or dollars, then it's not really that negative. You have one negative here and a predicted negative. But if you go to token marginized, that means it's backed, or Bitcoin is the collateral they're using. And you can see negative on OKEX, we got negative on BitMEX, and projected negative on Huobi. I don't know if I'm saying that right, but we have much more negative funding going on when it's Bitcoin collateralized than USD, which is fine and makes sense. But getting this leverage flush is needed. We have to get this leverage out of the system for Bitcoin. It's been in the system. It's been the reason for a lot of volatility and a lot of downward moves, people being over levered and being greedy in leverage. And that just gets us to this point where you see a lot of things kind of happening that you don't want to happen, and people start to hate the leverage market, but then they love it when the shorts start to get liquidated. So it's just short-term moves can be determined by leverage and derivatives. It happens in every financial market. And then finally, we can see this is the reason why, and this is all the leverage. And you see green is liquidating longs, red liquidating shorts. So the longs most recently have been way out liquidating the shorts, and that causes the price to move down, causes more liquidations, causes the prices to go down more, and we see this cascade until we finally find a balance where the longs start to get kind of flushed out. We hope that we're there right now, and it looks like we are, with funding rates going negative and all of these derivative signs pointing towards way more shorting happening than longing. So right now, it's looking like we could be actually finally, after months and months of this leverage, flushing it out, getting rid of it, and going back to, good old spot Bitcoin, people shorting it, and then grinding the price up and liquidating the shorts instead of, grinding the price down and then liquidating longs. So hopefully we get a little bit of a squeeze to the upside here in with these shorts that are pretty massive shorts on Bitcoin right now. So Bitcoin, honestly, looking pretty healthy. The market finally flushing this leverage. It's been needing to happen so bad, and it looks like we're finally getting that done. So we will start to see things kind of settle down and probably not be too ridiculously volatile or too interesting for maybe even another month. If we go back to what happened last time, it was like a 3-month bear market. We could go into another 3-month bear market, which we would be in for almost 2 months at this point. So one more month maybe, or even less, who knows? But maybe we see that price start to go back up, grind up, and liquidate these shorts. But that's going to do it for this video, guys. As always, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. I'll see you in my next video.